Let's talk about Amazon's RSUs, or restricted stock units. What are they? How do they work? And what should you do with them? My name is Scott Caulfield. I'm a CPA and CFA charter holder, and I am the founder of Sophos Wealth Management. So, Amazon's RSUs are just a form of equity compensation. Typically, when you get hired, you'll receive a certain grant of shares, and they're going to vest based on length of service requirements. So at Amazon, they have a backloaded vesting schedule, meaning most of your shares aren't going to vest until years 3 and 4. So here's the typical vesting schedule for Amazon. 5% will vest after your first year anniversary of your hire date. Then another 15% on your second anniversary, and then 20% each 6 months after that, which means in year 3, you're going to get 40% vested. And in year 4, you're going to receive another 40% vested. So in practice, let's just look at a quick example for how this works. Let's say an employee gets an initial grant of 10,000 shares. After 1 year, they will receive their first 5%. So in this case, they're going to get 500 shares. Now, based on today's stock price, Amazon's worth around $120 a share. So that's going to be taxable compensation of around $60,000 after 1 year. The default withholding rate, both at Amazon and a federal level, is 22% for taxes. That means Amazon is going to sell 22% of your shares, or 110 shares, for taxes. So that would be about $13,200 set aside. That means you're going to be left with 390 shares to determine what to do with. Now, it is worth noting that 22% is too low of a tax withholding rate for some, for especially those that are highly compensated. So that's something you might want to think about. Now, with those 390 shares that you're left with, I like to think of it as, let's pretend Amazon just gave you a big envelope of cash, and you get to decide what you want to do with that. You can invest it, you can save it. There's no advantage to holding those Amazon shares longer. If you sell them on that vesting date, there's essentially no capital gains or losses. But because the default option is to just hold them, many people do, even though that's maybe suboptimal for their financial planning scenario. To continue our example, though, let's pretend that you did hold those shares, and 3 months later, Amazon stock is now worth $150 a share. That's a $30 gain per share times 390. So you're going to have a short-term capital gain of $11,700 if you sold it 3 months later. I think the RSUs are a nice component of Amazon's compensation. Obviously, the stock's done pretty great over the last decade, but it's definitely a great planning opportunity for employees. So if you ever want to discuss your situation, feel free to reach out. Thanks.